One of my friends took a bet that Bitcoin would hit $475,000 by Christmas 2025. That means he's got 3 months to go between now and $475,000. And if Bitcoin does do that, I guess that ETH would probably be at like $10,000, $12,000, $15,000. I want to check in with this friend of mine. His name is Jake, and he's one of the smartest investors in the space. He's one of the best VC investors in the space. And I want to talk to him about VC. I want to talk to him about his price predictions, and I want to know how he's feeling about the bet. So that's what today is about. We're going to be speaking to Jake, one of the smartest investors in the space. And primarily, I want to speak to him about this bet that he took right here.
You had a call that, or I guess a bet, that by this Christmas, Bitcoin will trade at $475,000. And you called in on July 21st. You said, calling in a favor, crypto Twitter, help me out here. First, I've got to ask, what's the origin of this bet? Who is this bet with?
Yeah, so every I kind of said...
We'll catch up with Jake today. We'll find out about the bet, and we'll find out about all the investments that he's making. It's going to be a big show, our big Friday Banter. Guys, if that sounds good to you, let's get going. There are very few people that I can say are very, very, very much ahead of the curve. And when they invest in something, at the time it sounds pretty ludicrous, but then a year later, you're kind of like, oh, that's what they saw. And that's exactly Jake. Jake told me a while back, he said, listen, buy Worldcoin. To be honest, I didn't listen to him. I kind of thought Worldcoin wasn't the best investment in the market. If I look at the Worldcoin price since he called it for me last time, he actually told me Worldcoin was going to be as big as Bitcoin at some stage. But the price has been pretty much all the way up. He was one of the first investors in ETH and many other protocols. So it's going to be a real treat to actually speak to him today. But before we do, guys, it's Friday. It's our Friday Banter. You know that our Friday Banters have been sponsored by NordVPN for the longest time ever. This is the best VPN, and it keeps crypto investors safe. There's a link below. For $2 a month or $3 a month, you can protect your IP address against governments, malicious hackers, malicious actors in the space. And basically, like, do you know that when you're surfing, you leave a digital print with every single site that you go to with your IP address? That's fucking scary. Your internet service provider knows who it is. When you watch porn, they know exactly who you are. How does, bro? I told you. When you go onto Tinder, they know exactly which computer it is. You know, like it is honestly, you know, like if this wasn't my work computer, I would never, ever, ever, ever touch this computer without using a VPN. Especially, okay, at $2.98 a month. Like, that's the best insurance policy that you've got against your wife being able to prove that you were on Tinder. Because she can. But you don't have a wife, right? So then you're good. So guys, you can protect your IP address. For those of you who don't know how these things work, it's quite genius actually. Let me show you how a VPN works, right? So right now I'm in South Africa, as you know, on my way to Amsterdam for the Dutch Grand Prix. And you can see that my IP address is a South African IP address, right? But I can cheat the system, and I can tell the system, listen, I want to be in Portugal. And when I click that button, I'm going to be in Portugal. And then everyone's going to think I'm surfing for Portugal. And this one also has a double VPN. So you have a VPN over a VPN, which means that like you can never, ever, ever get caught. So listen, $2.99 a month, you support the channel and you protect your crypto. There is a link below. Hit the link below and let's get the show on the road. And I think the first thing we need to do is we need to ask Jake how he's actually feeling about this bet. So let's do the background.
A bet that by this Christmas, Bitcoin will trade at $475,000. And you called in on July 21st. You said, calling in a favor, crypto Twitter, help me out here. First, I've got to ask, what's the origin of this bet? Who is this bet with?
So how are you feeling about this bet? I want to ask how are you feeling about this bet at the moment?
Look, we needed a very bold bet at Christmas with my family. We were visiting my in-laws, my wife's family in Virginia, and was trying to express some bullishness at Bitcoin. Look, I think realistically, I don't think the probability of that is zero. It is zero. Now it's August 28th though, and we're still kind of around 100, and that's about 25K above when we made the bet. So it's looking a little bit less likely for now, but I still stand by the fact that we could go into an inflection point here.
Yeah, so every
year.
Christmas I go.
Oh, sorry about that. So you're saying you could go into an inflection point?
Yeah, and if we do, then it could get up there, but it's not looking as likely as it did last Christmas.
So if you were to go back to your in-laws again, now that you've got the price chart on your side and you know what's happening, and you were to retake that bet, where would you retake that bet today?
It'd probably be a little bit lower. But you know how those bets work, right? It's like you have sort of a range where you're going to win because it's like the person who's closest. I think my actual range is something like 300 through, 475 or above. So I don't know. I'd still want to be, for an aggressive bet, I'd still want to be in the hundreds, right? Not like 33, not like 75, not 120, but more like 200, 300, something like that.
So, I mean, realistically, do you think that Bitcoin can still do 200, 250, 300,000 by December, by Christmas?
I absolutely do think that. I mean, we really haven't seen the same kind of regime in Bitcoin that we're used to. I think, look, I've been saying on every podcast that 2025 is really the first year of institutional adoption and enterprise adoption of crypto. I've talked to a lot of institutions at this point. They all say the same thing. They say the regulatory environment has opened this up for us. It's made it a priority for us. We're seeing, BlackRock and big companies buying Bitcoin. We're seeing the ETFs doing well with inflows. We're seeing, kind of a long-term view where a lot of big institutions are going to be buying this thing. And so the price has to adjust. And I do think that it will adjust in the hundreds of percent.
So if that's the case, where do you see ETH? Because ETH had kind of lagged in the beginning of the cycle. Now it seems that institutions have discovered ETH. And when I say discovered ETH, there's ETFs, there's treasury companies, but it also feels like institutions are starting to use ETH. You've got Wall Street actually doing L2 roll-ups on ETH. So it's not necessarily just hey, we're buying this thing as an investment asset, but they're actually starting to actually use ETH. So where do you see ETH going in that case?
I have always been and continue to be very bullish on ETH. We've certainly had some narratives in the market over the last year or so, kind of questioning some of the things about ETH. I think that's good. I think that's healthy. I think kind of the Ethereum community has made some changes. What I think, though, is like if you look at it logically, there's two ways that institutions, banks, enterprises, etc., are going to be looking at ETH. It's either going to be an asset that people want to hold in their bank account or trade, or it's going to be a technology platform. Now, if we think about it as an asset, then almost certainly it's going to go into banks and other financial contexts, very, very quickly. It's a top 2 asset. It's been around for over 10 years now. We just celebrated the 10-year anniversary a few weeks ago. And so I think, if Bitcoin goes into people's bank accounts, I think Ethereum will follow very soon. Now, as a technical layer, this is a very interesting question. I think that the Ethereum EVM and L2 scaling strategy has the best technological, sort of configuration for customers like banks and institutions. And part of it is zero knowledge rollups. We're investors in Matter Labs, which is building out ZK Sync, a top zero knowledge rollup. And what we observe with the technology there is like the kind of privacy and the kind of interoperability that zero knowledge rollups offer are a great product market.
Did I just
like banks? And this is where things are going.
We lost you.
Still here.
We lost you for a sec, but it seems like we got you back. So you're saying in terms of the institutional fit, you're saying the combination of roll-ups onto Ethereum security plus zero knowledge proofs, or the ability to use zero knowledge roll-ups, kind of gives them the exact amount of privacy that they actually need and the right amount of security that they need as institutions to be able to onboard onto blockchain.
Yeah, I mean, like I said, in doing our due diligence, we've actually called up teams, that are working in, major institutions, and we asked them, like, what are you doing in blockchain? Why are you doing that? And what technologies are you using? On the technology side, it's very clear. Like people like banks, they are doing research and development. They're trying out different blockchains. They're probably not committing to a single one. But the trends are very clear. The vast majority of the chains that they're trying out are EVM chains. The vast majority of kind of the configuration of those chains are roll-ups. And so what I think we're starting to see is the early stages of the modular blockchain thesis starting to actually go to market and starting to play out. I think it's very, very likely that a bank is going to want to have their own chain. They're not going to want to build that from scratch most of the time. They're going to want to use a technology that's tried, true, secure, private, scalable, etc. And those are now available in the market. You see Robinhood, making a deal with Arbitrum. You see,
Coinbase,
BlackRock, etc.
Well, Coinbase making a deal with Optimism. So I mean, that's pretty much along the same level. So you kind of see the institutions using existing tech stacks. Some of them with zero knowledge, and some of them with normal proofs.
And the key is that they are using their own chain. So like we can argue that the biggest projects with the most kind of customer traction and the most number of customers to bring to blockchain would be, people like World, which have their own Optimism chain, World chain, people like Base, the Coinbase chain you just mentioned, people like Robinhood who are doing stuff with Arbitrum. And, it's going to be very natural for someone like a bank to create a number of products. Like you can imagine, one product could be a trading product that will live on its own L2. Another product could be a depository product that earns customers yield that could live on its own other L2. And those L2s are going to want to talk to each other because customers are going to want to move their funds from one and to the other and so on. And what is the best technology for that? I think the best technology, the most linearly scalable technology, the technology that has the best privacy fit and the best interoperability, the most secure interoperability, is zero knowledge proofs, zero knowledge rollups.
So with that investment thesis, ETH-centric institutional investment thesis, US institutions actually, for the first time, as you said in the beginning of the show, actually like being blockchain focused and actually investing in blockchains. What would be the investment case? Like if you were a retail investor, now there's a big difference between like you and I and people actually watching the show. You and I see very, very, very early stage deals. We sometimes hold on to our deals for 2, 3, 4 years before we realize any kind of liquidity. The average investor who's watching the show, he doesn't have access to those deals, and he's basically looking at the markets now and saying, I like what Jake's saying. I like the fact that he's talking about roll-ups. I like the fact that he's talking, but how do I get in? What do I do? What do I buy? What are the available plays on the market that you think one should look at if they believe in this thesis?
If you believe in that thesis, then I think you can try to sort of buy the tokens of the public blockchain that underlie these types of technologies. So that's going to be Ethereum itself. It's also going to be the tokens of the roll-up networks that kind of exist across all of the app chains that are on them. So for example, in Optimism, OP token is supposed to be a governance token that all of the constituent chains can use to make technological upgrades and things like that. In ZK Sync, you're going to have the ZK token that's actually out on the market right now, which will also have a kind of an interoperability function, as this network sort of matures, right? So those are tokens that you can buy and bet on the fact that, someone could come along like a bank and, roll their own app chain in this network.
How do you believe that these networks accrue value? Like we saw Robinhood talking about a deal with Arbitrum, and it feels like what they've done is they forked the Arbitrum chain, or they've used the Arbitrum, but they're not. It doesn't feel like the value is really accruing to the Arbitrum token. So like, is there in the L2s? Is there actually value capture? I mean, the same thing happened with Optimism and Coinbase. So Coinbase used the Optimism fork or the Optimism stack. And Optimism went up a little bit on the announcement and then came straight back down. And right now, all the hype seems to be on Base and Aerodrome and not on Optimism and, for example, Velodrome, which is the previous version of Aerodrome. So it's like, I'm kind of looking at this and going, I really believe in the thesis. And I really believe that Wall Street's going to come here and they're going to create their own forks and use the tech stacks. But I'm not sure how to capture the value accrual. That's the problem.
That is a very, very interesting question, Ron. one that we thought about a lot. And, kind of the current view that we have is the interoperability of chains is going to be really important. Now, what do I mean when I say interoperability? It's the ability to send assets across these different chains. It's the ability to call methods and smart contracts across chains and essentially share and verify state. Now, different kinds of rollups have different kinds of profiles for interoperability. My opinion is that zero-knowledge rollups have the most secure, fastest, and most robust interoperability, so that when these chains on the ZK Sync Elastic chain interoperate, it almost feels like you're on the single monolithic chain. But the reality is that users have to pay for the interoperability piece. Now, there's like a broader view of that, right? Like we've seen tons of interoperability protocols, for example, a cross protocol or 𝗲 protocol. The job of these protocols is to move assets, across many different chains. And what we know from the market is that creates billions and billions and billions of dollars of volume. And one of the issues with it is that there's a kind of race to the bottom on fees. And so for one of these investments to really knock it out of the park, they have to capture sort of most of the market. It should be kind of a winner take all result eventually, where one or just a couple networks are doing the vast majority of transferring these assets across the chain. And then I think, that could be a really, really interesting return.
So, I mean, ZK Sync is one of the projects that you actually mentioned, and it's a project that launched a while back, and I must say, we haven't heard much from these guys. Is it because they tech people and because they don't really make noise in the markets? Is it because there's not much progress actually taking place? Walk me through what's going on here. This was one of the most anticipated launches ever. And I don't know, it just feels like we haven't heard much since they launched.
I mean, look, I think the reality is that we're in 2025 in a time where we now have to actually go and get real customers, real traction, real revenue, real product market fit. And so what we've been doing for 10 years is we've been selling these products internally to Web3. Now, the current sort of crop of rollups that are out of the market, they're not doing poorly. They're converting people like World, and World has 33 million registered users. By the way, the last time I was on this show, World had 8 million registered users.
I remember. We're going to talk about Worldcoin because you said it can be as big as Bitcoin, if I remember correctly, on the last show.
Yes.
So we will talk about that. But I think what you're saying is it's time to actually go and do business development and actually onboard users onto our tech.
What I'm saying is we don't see that full institutional enterprise adoption kind of playing out as products in the market yet, but it's definitely started. It's definitely rolling. I think ZK Sync is, essentially the best positioned chain to capture that kind of customer and give them the technology that they want. So as a matter of fact, at CoinFund, we kind of doubled down on the ZK token just a few months ago when, if you looked at the charts of rollups, they all seem to be in the dumps. But we did 2 months of due diligence, actually talking to these customers and trying to understand what they're doing, in order to make that re-underwrite.
Okay, so if you were buying a basket of ETH betas to ride between now and December when you meet your in-laws again, what would it look like? You'd obviously hold ETH as the asset, right? I mean, you've always been bullish on ETH. In fact, you've always been the epitome for me of an ETH bull. I think we met 9 years ago, and even then you were you were the ETH bull. You were the ETH guy. So I guess that ETH would be in your portfolio, right?
Absolutely. ETH remains in our portfolio, in my portfolio. And I would say, again, scalability, interoperability, privacy, and security are the 4 technical issues that we have resolved in the last 10 years having to do with anything that you want to do on a blockchain, right? All of that is available on ETH. Horizontal scalability, meaning an infinite amount of TPS, is now available, in the form of zero-knowledge rollups, for example, ZK Sync Elastic Chain. And so I would be holding, those really fundamental assets to that infrastructure. And that would be ETH, that would be the tokens of L2s that are actually getting traction and capturing customer activity. And of course, there's probably other tokens you can hold that are more specific. You could think about AI, you could think about prediction markets. But if you want like a base basket of things, it's ETH and L2s, in my opinion.
So ETH, Optimism, Arbitrum, ZK Sync, Starknet?
I mean, sure. Yeah, like you can, there's a website called L2Beat where you can see sort of the top ones by TVL, by activity. Again, I personally, I'm a bit contrarian in that comp set because I think ZK is extremely well positioned for enterprise adoption. Not a lot of crypto people have been thinking about that, when they were investing in tokens over the last couple of years, right? But I think it is happening and it will happen.
All right. Where does that leave Solana? So you've got ETH. ETH is becoming a very scalable chain on the side chains. Solana had a great last cycle and beginning of this cycle where where everyone thought that ETH couldn't scale and everyone declared ETH dead. And now there's a big question about, I'm kind of keen to understand, where do you put Solana in this whole thing? Do you see, what do you see the future of Solana? Do you see it as the meme coin, shitcoin chain? Do you see it as not Wall Street's chain? How do you see this thing playing out?
I probably don't spend enough time on the Solana chain to give you, a super deep analysis there. I will say that we are, for example, investors in Hello Moon, which offers Solana RPC infrastructure and APIs and things like that make developers' lives easier. So we're kind of in an infrastructure view on Solana. I think Solana is perfectly fine. It's great technology. It has a right to exist. It has a right to, try the scalability that it has tried. But Solana, historically has done vertical scalability, whereas, as I mentioned, horizontal scalability, I think is very, very important and really unavoidable to get to, true scale. I mean, when you're thinking about piling up the transaction volumes of JP Morgan and Visa and MasterCard and every single Fortune 500 company eventually, it's really something that, you're going to have a hard time doing on kind of a monolithic chain. I think Solana folks know that. I think they're also creating solutions for horizontal scalability, things like network extensions and even their own L2 layers. I've seen some projects to that effect, right? So, I'm happy to have Solana in the market competing. I just think it's a little bit less likely that without a modular thesis in Solana, institutions and enterprises will kind of use it, at scale.
So that means that if you were to choose to invest in one or the other, Solana versus ETH, between now and the end of the cycle, Solana $212, ETH at what is the ETH price? $4,500. You put your money into ETH.
Look, every investment decision is a trade-off, right? Between risk and reward. And it kind of depends on what, where you are on that frontier. If you want to if you want to buy a little bit of asset, set it and forget it, not have to trade it very often, then I would say, ETH, Bitcoin, things like that are probably the more conservative choice. If you're going into newer technologies like Solana or others, right, then I think those things, and ultimately their success could result in a bigger return if you're right. But
what would Jake do?
Jake's holding Bitcoin and Ether and a little bit of Solana, of course.
All right. And what about if I gave you the same thing, ETH and versus Hyperliquid? So how do you see the thesis for Hyperliquid in the cycle?
I'm not a Hyperliquid holder today. I'm not very close to sort of per platform, so I'm probably not the best person to ask here. I'm super happy that they're creating a greater degree of consumer adoption, and I've seen the product. The product is phenomenal. But I just don't participate today.
Okay. So what is keeping you busy? Last time you came on, you said that you were looking at fully homomorphic encryptions, FHE. You were looking at AI. You told us that Worldcoin. Yeah. I'm keen to understand where your head is now.
So just 3 areas right now that are taking up most of my time. We talked a lot about the institutional adoption side already. That's one area. I think there's now a push to do more consumer. So Base, World, abstract chain. These are all examples of chains that are starting to go to market to real retail users. I live in Miami. We literally have a World flagship store in Miami. People in Wynwood could be walking down the street, they see a weird orb, they go in there, they learn about blockchains. You can learn about blockchains these days by going into a store.
Everything. I've heard a world store in Miami of all places.
Absolutely. And there's 5 more across the United States, like San Francisco, Atlanta, etc.
Are they stores or are they scan centers? Are they like stores where you buy stuff, or is it like a walk in, put your details in, scan, and get your airdrop?
It's you can walk in, learn about the project, learn about the chain, learn about how proof of personhood works, and you can also get verified. By the way, if you see in the background here, I have that little gray box over here.
Yes,
that's my world orb, and if you ever come to my house, I'll scan you personally if you want.
Are you still as bullish? Are you still as bullish? Like on Worldcoin, last time you came on, you said, look, proof of humanness is going to be a big problem. I must say, I got it, but I didn't really get it. And now I'm starting to get it. And the reason why I'm starting to get it is because we're starting to mess with AI. And, one of the experiments we're doing is we've recreated Run in AI. And when I say recreated Run, we've done it in multiple ways. So one is we've literally trained an AI on every single piece of content that I've ever made.
My goodness.
And what we've done is we've then taken a 3D model of me and put it through HeyGen and all the other things. And we're trying to simulate what shows this AI would make. And he actually makes really, really, really fucking good shows. Like I can see, I suspect that within 6 to 12 months, probably you won't need me. You won't need me at all.
Am I talking to the real Rand right now? Or is
hold on. So that's proof of humanness. So now I'm starting to understand how important proof of humanness actually is, because you're not going to, I actually want to show you something. I want to show you something. This is from one of our partner channels. It was one of our partner channels. Some of the viewers may actually recognize the model here, but just give me 1 second. I think it's important that you see what we're dealing with in our industry. And I don't think that our industry
Something big just happened. In just the past week, multiple massive alt season triggers have fired off.
Okay, let me share my screen.
Bitcoin dominance finally dipped under 60%.
Okay, so look.
Something big just happened. In just the past week, multiple massive alt season triggers have fired off. First, Bitcoin dominance finally dipped under 60%. Then, ETH blasted through 4.2K for the first time since 2021.
So, I mean, she's not real. She doesn't exist. She's a voice of a friend of ours. And that avatar is someone that doesn't actually exist. Now, I mean, you need to know about proof of humanness, right? Like, you need to know that if you're speaking to, that could be your banker. That could be your customer service agent. That could be your influencer. That could be a sales rep. You have no idea. You have no idea whether the person, this is like V1. Imagine V10. So I think now I'm starting to really understand the use case for proof of humanness and being able to verify that the person that you're watching, the person that you're speaking to, the person you're interacting with is actually a human. So it's the first time that I've actually felt that problem.
When I was at the World event, I think that was in February of this year, where they were announcing, and he was saying, we think proof of humanity, we're going to focus on 3 core use cases: is dating, gaming, and social. And what he was saying was that, they made this partnership with Match.com, where when you interact with someone on there, 100% that you're talking to a human. Gaming, it turns out like a huge percentage of gaming activity and transactions are actually happening against bots that are trying to cheat in the games. And finally, as you're kind of calling out, AI is getting so good, video, audio, and text, that on social media, we really cannot tell, who is human and who is not anymore. And, we really need this. And the application there goes very deep. Like, we know that bots have, for example, influenced elections in multiple different countries over the years, right? Because of social media, and now we have a tool to actually, disambiguate them.
So Worldcoin, I get the thesis. You're still bullish. Chart's actually looking good when you look at it on the long-term time frame. The thing's actually moving up pretty well. What else are you looking at? I mean, are you looking at Worldcoin? Are you looking at any other AI applications in crypto?
Yes, but I would just want to say one more thing about World, which is, one way of looking at World is this proof of humanity functionality. And that in itself is a big business. If you think of that as a competitor to Clear, Clear is a $3.5 billion public company these days. And that's just on, being integrated into airports and sports venues. Now, with World Proof of Humanity, you can go global. You don't need government issued ID, et cetera, et cetera. But the other way of looking at World is as a consumer go-to-market for Web3. Like if you download the World app, you get essentially an iOS app store of applications that are really, really easy for retail users to use. Like they don't need to go buy crypto first. It's all integrated. The onboarding process, like I said, you could get it done at a store or interpersonally with someone who owns an orb. And as soon as you're in, you can go ahead and try a Web3 protocol like Morpho and earn some yield, right? And never having had crypto before. I had the experience of onboarding my mother-in-law like into the World app, and it was very smooth.
So do you think that World becomes almost like a social ranking app? When I say social ranking app, I mean like credit scores, DeFi Web3 credit scores linked to your...
Well, what I'm saying is I think that the App Store idea, like the app stores work because they have a huge number of eyeballs, pardon the pun. And World today has 33 million registered users. Base is going kind of for the same type of audience, right? And so once you have an audience, you can then actually attract real developers who want to make money on the platform. And then you start this virtual cycle of producing, hundreds and then thousands and then tens of thousands apps per month. And once you do that, you actually find product market fit. So what I'm saying is you could look at World as a go-to-market for Web3 apps, and it's poised to become a really, really important channel whenever a Web3 protocol, wants to go to market to real retail eyeballs.
Okay, cool. So World, Ethereum, the L2s. What else are you looking at? What else is keeping your mind occupied?
And then decentralized AI has been a huge topic for me for the last 2 years. I would say kind of the most visible thing there right now in the market, actually, if you pull up arma.xyz.
Arma, A-R-M?
arma.xyz. So Arma is an agent, a financial agent that's created by our portfolio company 𝗙𝗂. And what it does is you give it a little bit of stable coin, you put a little bit of your USDC in there, and you get an 83.45% higher APR. In other words, today that's around 15%. And the way that it does that is it optimizes your stable coin across different protocols that have different yields. And as those yields change over time, it sort of moves your money to the one that has a better yield. So what's super interesting.
Before we get there, like a lot of people here don't know. I know you're an investor in 𝗙𝗂, so maybe let's just take one step back before we talk about Arma. Just a little bit of a background as to the 𝗙𝗂 thesis, what 𝗙𝗂 does, why you guys invested, and then we'll go back and talk about the specific agents.
Absolutely. So we invested in 𝗙𝗂 at the beginning of 2024, and the idea was that they were working on verifiable inference, for AI and for agents and bots. And they built one of the first systems that was doing what's known as ZKML, zero knowledge machine learning, on chain, literally the first project in market that had a robust framework doing this. And then, toward the end of 24, the question was like, well, how do we take these agents and go to market? Like, what do people want to do with agents? And it turns out that, the best business model and the most interesting application, the most useful application for AI agents that are in Web3 is managing financial assets, kind of being like literally a robo-advisor. And that's why they've built Arma out as an example. Now, Arma doesn't have a ton of TVL today. If you look at, I think it has something like 16 million.
Okay, it's capital optimized.
But the volume associated with that amount of money is 1.5 billion. And that shows you like how active these agents are when they're, acting on your behalf. So we're in a world where AI agents are going to be generating insane amounts of volume, trading, optimizing, earning yield, participating in Web3 and DeFi protocols, on behalf of people. And that's what 𝗲𝗲 and 𝗙𝗔𝗄 are demonstrating.
So 𝗙𝗔𝗄 is if I understand correctly, 𝗙𝗔𝗄 is almost like the infrastructure or the launch pad for multiple agents, but 𝗲𝗲 is only one of those many agents
That's right.
Okay. Then I take it you're bullish on the AI agent thesis, right? Like we had an AI agent bull run in November, December last year. That crashed very quickly with the rest of the market. Most of those agents never came back. The AI XBTs, the AI 16Zs, and all of those. Yeah, like you remember generation one.
So I do remember generation one. I'm actually kind of bearish on social media AI agents. I'm bearish on, basically what amounts to just social influencers that are AIs, although that was a cool experiment to run. The reason why I love what 𝗙𝗔𝗄 is doing with agents is that because they're running a real business here. This is a robo-advisor. It has an addressable market that's over $100 billion, dollars within DeFi, and they're poised to take a lot of fees on that. So these are agents who can actually make money versus these AI influencers that are speculating on tokens.
What else? So 𝗙𝗔𝗄, AI agents. Yeah. What else are you looking at?
So the other big topic in decentralized AI that I think CoinFund has championed is decentralized training. Decentralized AI training 2 years ago was said to be completely impossible. There's a lot of good technical reasons for that, but what we actually see is that there's about 4 companies in the world that are very credibly tackling this problem of like, how do we train large competitive AI models on decentralized networks? That's a really hard problem. It requires AI PhD level work. And one of our companies, Pluralis, has solved like a very, very key academic problem related to being able to do this. So they're currently heading for a training run in September where they're going to show that they can train a large model that is pre-trained on fully decentralized networks. We have another company called Prime Intellect that has already demonstrated a different method and put a 32 billion parameter model into production, doing a bunch of post-training, as a swarm. And we have yet another company called Jensen that has something. They were actually, their model was the #2 most downloaded model on Hugging Face because they built this giant reinforcement learning swarm and also have demonstrated that you can train models, on a decentralized network. So Ron, to summarize all of that, we're heading to a world where not only are there going to be tons and tons of AI models, but the ones that come out of Web3, we're going to be able to own them and hold tokens that give us rights to the revenue that come from people using these models. And we're going to have kind of a stock market and be able to invest in the best intelligent models, the best video models, the best audio models, and really like trade them just like stocks.
Amazing. Wow. So AI, Worldcoin, ETH betas, layer 1, layer 2s, primarily in the zero knowledge area. I think that's what you mentioned. What else? I'm trying to dig deep here because I know that every time I've listened, last time we spoke about all these things, we're looking forward now. All the charts are up. So I know the deeper I dig, the more alpha I'm going to find.
Absolutely. Okay, I'll give you a few more things. So just about a week ago, CoinFund announced its investment in and lead of a company called Iris, IRYS. And Iris is a programmable data layer. It's basically a blockchain where, not unlike 𝗏𝗏, and actually the team behind Iris was the team that scaled 𝗏𝗏 a couple of years ago. But this blockchain, you can store large amounts of data in it for a very, very long time. And what's really, really cool about Iris is that you can then write smart contracts around that data. So this is like, if you think of any like data intensive application or an application which requires a lot of, gigabytes or terabytes of business data, you start to see how this could be a really interesting product market fit through a blockchain like this. The team led by Josh Benaran, absolutely fantastic folks. There's not that many people still in the world who can write a blockchain from. And what's interesting is that there's a tie-in into the AI space because, it's when these AI agents came along that they started to create demand for actually decentralized storage. Now, I've been in the decentralized storage game for like over 10 years. I was the first investor, one of the first buyers of tokens in Saya. I participated in the Filecoin IPO or ICO. I worked with Tableland and Ceramic Network, which tried to take that decentralized storage to market for about 7 years before merging with Tableland into Recall, right? So I have like a lot of experience in this space, and I can see that only now are we seeing actual demand starting to pick up for decentralized storage.
Have you been following the 𝗬𝗓𝗪 story? So like 𝗬𝗓𝗪 was initially storage protocol only, and they said they're going to do, or they did storage with one payment forever kind of thing, where you store your data forever, and they used that fancy endowment model. But then they built that super parallelized computer, which is called the AO network. Have you been following all the developments on AO and on 𝗬𝗪𝗪?
I haven't been following closely there, but yes, I am aware of that story, and I think it's really interesting. I think it's a network that I believe they peaked at something like a $4 billion FTV, if I'm not mistaken. And this was really kind of, I think, on the back of the NFT space, right, becoming very ubiquitous, and people kind of saying, hey, like, we need decentralized storage to store the media content of these NFTs. But unfortunately, the NFT mania kind of died off in early 2021, and then there was sort of less, call it like traditional or Web 2 demand for that type of product, and then the Web 3 demand fell off as well. So working with people like Tableland, just a few years ago, you could see that even in Web 3, people who were like great potential fits for a product like that weren't really buying it, because if you don't have customers and you don't want to spend money on decentralized storage or moving to decentralized storage. And again, I think this is a very different situation now, because there are AI agents in Web3 that are operating, and they do need data, and they do need to store it in ways that are maybe more publicly accessible. And that's why these networks are starting to become a fit.
Amazing. Jake, listen, brother, we are out of time, but thanks again for all the alpha. Thanks again for all the love. It's great to have you on here every once in a while and just get your view.
Absolutely.
As I said, I've met you 9 years ago. You haven't changed your tune. You're an ETH bull, an ETH maxi, not a maxi, but an ETH bull through and through. And always ahead of the curve, actually, always ahead of the curve.
Thanks, sir. I'm definitely not a maxi on any chain, but I appreciate you saying that, and great to see you. I hope you have a nice trip.
Cool, my friend. Thank you very much. And on that note, guys, I'm going to be leaving now. I'll see you guys again on Monday. Have a great weekend and trade well, my friends.